Hello and welcome back to another episode of the Mortgage Musketeer, where today I'm starting a new series for first-time home buyers. Yes, first-time home buyer class that you can see at your home and don't have to go somewhere to learn all about being a first-time home buyer. Now, understand that a first-time home buyer knows about as much as a second and third time home buyer most of the time. So this video is for anybody. It is also for realtors. So if you are a realtor and you need to educate your clients, or you want to send somebody to be educated, send them to this channel. Please subscribe, help support the subscriber base. If you guys are learning something, help get this out so people understand, because I'm going to take away the mystery of home buying. Because home buying, ladies and gentlemen, is simple. There's no reason why just about everybody watching this video cannot buy a home this year. I'm serious. Everybody thinks that buying a home is this big mystery, but it is not. It comes down to three things: your credit, your assets, and your income. That's it. Now, within that, there are a lot of nuances, and I'm going to break down this in a series where I'm going to address each one of those. But the very first thing I want to do is give you an overarching, hey, if you're a first-time home buyer, or if you're thinking about buying a home, start here. Number one, put your money in the bank. If you do not have your money in the bank, whether it's cultural, you don't believe in banks, you don't trust a bank, whatever the case may be, you cannot buy a home, you cannot finance a home unless you have assets, meaning money in the bank. So if you do not have them in the bank, put them in now. 60 days later, you'll be able to use those. I'll explain that more. I have videos throughout my YouTube channel here that can break that down, but I'm going to break this down for everybody so that you understand how this works as a first-time home buyer. Next, get your credit pulled, or go to one of the free once a year where you can actually get your FICO. Your Credit Karma is wrong. I've got a video on it. I'll link it here. Check it out. It doesn't work. It is on a Vantage score. You need your FICO score. All right? I'm passionate about it because I see it all the time. People think, oh my gosh, you know, my credit score is where I don't care until your lender pulls it. And yes, your lender needs to pull it. And let me take a moment to say, this class isn't to sugarcoat. I don't know who's watching this, so I'm just telling you straight up. I'm looking you in the eye as much as I can through a camera and telling you, stop the BS. Get your credit pulled. Because if you don't get your credit pulled, you don't know what your score is. And a lender cannot tell you what you can do until they pull your score. And I know this sounds harsh, but if you're worried about getting your credit pulled, it's only going to impact you 3 to 5 points. That's it. And if you're concerned about a 3 to 5 point credit hit, you got bigger problems. This is a little bit of tough love. So if you need your credit pulled, you got two choices. Contact your lender, and if you're in any of the states below and you're not ticked off by how intense I was saying this, I'm happy to help, and I'm going to break it down for you. And you can see through the other videos kind of how I operate. But here, I'm just trying to cut through the BS and tell people, stop. Get your credit pulled. Because until you get your credit pulled, it doesn't matter. Stop negotiating. Stop rationalizing. Stop worrying about. Know exactly what is on there. Because 9 times out of 10, when I pull credit, people don't even know what's on their credit report. And I take the time to break it down and show them what is on there. Your lender should do the same thing. You can go in once a year, you can get a free credit report. So if you're really teed off, or if you're thinking long time in the distance before you're going to buy a home, go that route. That's fine. But understand that it needs to be your FICO score. A Credit Karma pool does not work. Somebody credit monitoring does not work. Whether it's Experian or credit card, no. You need to pull. You need all 3 scores. You need to know what your mid score is. You need to know what is on your credit, and you need to be able to address it. The easiest way to do it is call a lender. Call a lender, have them pull your credit so you know where you're at, because that will cut through all the BS and you'll know exactly what's going on. And then, one of two things. Either you already qualify, or your lender can put you on a path to get qualified. And if you're disciplined, there's no reason why you can't get your credit cleaned up and boost your credit score if it's not where it needs to be. But understand that credit, we don't know. There's no possible way to know until we pull it. So just stop and get it pulled. And then the mystery's out, the anxiety's out, because it is what it is. And one of two things, either you're good or you need help. Either way, you need to take action. So have somebody pull your credit, or go to the once a year where you can get it pulled for free. It just takes longer, whereas your lender can tell you in a matter of seconds. Okay, your choice. But either way, you've got to know what your credit is, because in addition to your credit score, it's the debt that is on your credit report that is used for your debt to income ratio. So until that credit is pulled, we don't know what's on there. So there's no possible way to accurately tell you if you qualify until your credit is pulled and we know both what your score is and what your debt is. Okay, now the third aspect is your income, because we're dealing with a debt to income ratio. So what that means is we really need to know how much you're being paid. If you are a salary worker, super easy, you should be buying a home tomorrow. Okay, the only question is, do you have the assets? Okay, do you have the money in the bank? If you're salary, super simple to calculate, but if you're hourly, understand that there's all kinds of different hourly pay. There's shift differential, there's overtime pay, there's bonuses, there's all kinds of other items that go in there. And we need to be able to see that to actually accurately determine what your income is, especially if you are a nurse or an educator or a truck driver paid by the mile or any other type of variable income. If you get shift differentials, if you get a lot of overtime, those things we need to know how long have you been on the job, because we need to be able to average that over a couple years. So that's a very important aspect, and we can't tell you. A loan officer shouldn't tell you, yeah, you're good to go, unless they've actually done the proper research, usually through a verification of employment, meaning that we're going to reach out to your employer and get your work history, and they'll break down your pay in the different categories over the past couple years. Depends on how long you've been there. All right, and also know that if you're working 2 jobs because you think that if you make more money you're going to qualify for more house, until you've worked at 2 jobs for 2 years, most of the time you're not going to be able to count both income. So keep that in mind. All right. So there's a lot of aspects about income that they're not nebulous, but we have to actually see what's going on in order to accurately determine how much income you have compared to the debt, which will tell you how much buying power you have. So that's a really important thing to get into. All right, so the other thing that I'm going to tell you is, if you are paying rent, I beg you, pay with a check. All right, you gotta pay with a check, because if you're paying somebody cash, you have no good record of that money coming out of your bank. And most of the time, people don't just take out. Like if you've got a $500 rent, they'll take out $700 because they only want one withdrawal, and then they'll use $200 for groceries and then give their landlord $500. But unfortunately, you can't track that. There are certain instances where lower credit scores can buy a home if we can show 12 months of canceled checks or 12 months of on-time rent payment. But in order to show 12 months of on-time rent payment, we have to be able to show it exactly coming out of the bank. So if you have not been doing that, start today, because just about everybody that's watching this video could buy a home a year from now if you paid your rent with a check, because that check will show the exact amount coming out on time. Don't double your payments. Don't pay ahead. Every month. Make the payment on time, and if you do that in a year, everybody probably could buy a home if you have the assets, okay? Because manual underwrites and things like that happen, and the most important aspect of a manual underwrite, the very first thing they're going to ask for is rent history. And if you can show 12 months of on-time payment, you've got a really good shot of buying a home. All right, now, I hear it sometimes where the landlord says, hey, I want cash only. Well, if that's the case, get them a cashier's check. I don't like cashier's checks, but it is a method. If you get a cashier's check, get it for the exact amount of the rent as a single transaction, so that that money comes out. You might have a little bit of a fee, a couple bucks for the cashier's check. That's fine, that can be sourced. Make a copy of the cashier's check, then pay your rent. And then in a year from now, you have 12 copies of those cashier's checks, and you have 12 bank statements that shows that exact amount coming out of the bank. That works. That'll source it. All right, one more thing is that we are in tax season right now, so people are going to be receiving their tax returns, and that's going to give them assets. It's going to give you down payment money. This is the time to strike. This is the time to see, can you buy a home, or if you cannot, utilizing your tax refund money and applying it with great benefit towards issues on your credit. Don't willy-nilly go pay stuff off on your credit report if you've got collections and things like that. If you know it, get advice. And if your lender recommends you to go do some credit repair, invest in the credit repair, because it's going to clean up your credit and you're going to be able to buy a home. Invest in yourself. This is the time to do it. Either you qualify and you can use that for down payment, or you don't qualify and you can use that money to clean up your credit and get qualified. Because there's other ways to buy a home if your credit score is above a 640. There's USDA rural home housing. There are down payment assistance program. There are some first-time home buyer programs. There's all kinds of different things that you can do, but you cannot if your credit is jacked up. So going back to what I was talking about, get your credit pulled and then see where you're at, because this is the time to know if you can apply your tax return to help benefit you for the future. All right, and the last thing that I'm going to leave you with is the whole point of this first-time home buyer class that I'm going to put online here over a series. And I'm going to go in much more depth, where I'm going to kind of hit each one of these in more depth so that you can get a better sense of what's going on. And if you have any questions, put them in the comments below, and I'll specifically address those in the upcoming videos. Okay? But what most people do is they go out and they want to look at homes before they're qualified. And then they fall in love with a home. And then they go and try to get pre-approved. And then emotions are involved. So people are trying to get qualified so they can buy a particular house, instead of getting pre-qualified and then going to find a house. Because if you do it in that order, it's less emotional, because you know what you do qualify for. So you're not looking at a $300,000 house if you only qualify for a $215,000 house. Or you can take it all the way down. You're not buying a $150,000 house, or looking at a $150,000 house when you only qualify for a $90,000 house. It runs a spectrum, depends on where you're at in your life and what kind of income you have. But understand that, take the emotions out of it by knowing where you stand, and that will help the realtor, because it saves the realtor's time. They're not going to run around showing you houses that you don't qualify for. We're not going to get emotions going, and it's going to allow you to know exactly what you can do and make the whole process smoother. And that's what I'm going to be doing in this series. I'm going to break every section down, so you know, walking through this, how do you buy a home, hitting the easy button. All right, until next time, it's all for one and one for all, and we're going to make you a new homeowner. Until next time.